Yeah, okay, mate. So sorry for late reply. I was tired last night. I seen your message last night and I was just too tired to kind of get into it. The truth is, I've not really thought about it or what I'm going to say. But we'll just look over the charts and we'll see what we can come up with. The comparison. I'm thinking that you were talking about. I compared this chart here, obviously. Here I think we were up here and we were topping and we were kind of forming the same sort of pattern, and I said then it's going to drop 94% because ETH dropped 94%. Now I think this dropped 95 or 96% down to here, but it was a pretty good call. But even in the moment, I did make the call as well that the white 100 moving average would form and have the same pattern, very much just like, here Ethereum had already formed this pattern years previously, and I had suspected that this was going to form and create a giant bullish pressure cooker. Now, to be honest, it was, but we didn't get any spike up in the middle of it like Ethereum got the spike. The pressure cooker was very wide. This was more of a tight pressure cooker, but all in all, the two of them were almost identical. No, I don't want to click on there. Almost identical, except for this sort of spike up higher. Now, Sol did not get the follow through because Sol, for many reasons, Sol was mostly built on meme coins and Ethereum. Ethereum back here in 2020, 2021, or in here after COVID, it had a larger majority share of the market and less competition. It wasn't built on meme coins at the time. It was kind of, at the time, we are in it for the tech. Here we are kind of in it for the meme coins and the quick gains. Very different environment. On top of that, of course, there was huge money printing coming out of here. Here there was no money printing and there was quantitative tightening, and all of the other problems with the Gensler and the Biden administration and all the rest, and the high interest rates and all. So the times were very different, the situations were very different. Market structure was the same, at least coming into the base and the move, very similar at least, but obviously the macro was different. Now, if we come back here in the MartyBoots BTC channel, I made an overview on the entire market, warning about the bearish yearly stop hunt and warning that I was not a fan of Sol. I was not a fan of Sol or the meme coins or the DEXs, and I was calling for it to be a bubble because meme coins are basically the new pet rock. Now, I got quite a bit of abuse for that, and the price was right up here, as you can see. What date was that? The 22nd. 22nd, there's a 20th of January, it was right up here. Sol was on its exact highs, basically up right in here. Obviously Bitcoin was on its highs, the meme coins were all on its highs, all of that stuff, and I made the video warning the entire group about my concerns with liquidity issues and market saturation. And market saturation is an extremely important factor that people don't take into consideration. So of course, when I see a bearish yearly stop hunt, I need to overview the entire market and look at the flaws, look at the problems, look at the issues, and that's exactly what this video was all about. And I think people can learn a lot from this video. It's not easy to call this at the very top of the market and try and warn people, almost to the very day that the market was kind of topping out up here. Not too far from it, and calling a bubble in the market, and that's not easy. But you can see right here that bearish yearly stop hunts. I've said many times in the past, you do not want to mess with these until we get back above this. This is bearish, and well, that's exactly what happened. And it's always a surprise to people, and even myself still. Bitcoin has dropped 20-30% or 25%. But the altcoins have been absolutely decimated. Some of the altcoins in here have dropped 90%, especially all the meme coins, and that's because of low liquidity issues. There's no buyers to support the market, to support those meme coins, so they're extremely volatile. And I must have mentioned in the group about it about 100 times that this is a bearish yearly stop hunt, and even at one point there was a bearish yearly, bearish 3 month, bearish 6 month, bearish monthly, bearish 9 week, bearish 2 week, bearish weekly, bearish 3 day. Every single time frame had a bearish stop hunt on it. I should go back and find that. I posted in the BTC chat, but I don't think I've ever seen that before, that every single time frame right down to the 4-hour chart or something had a bearish stop hunt on that, and it was quite extraordinary to see that. I'm not sure if I've ever seen that live in the moment where I was, sometimes you look back on it, but I think it happened live on the chart right here, and I posted about it. But and also obviously we knew about the Sol unlocks coming in as well. This is a different chart actually. This is I posted this in another channel, but this is the Sol dominance versus the ETH dominance. Sol was forming and still is forming the same dominance chart as Ethereum, as ETH BTC formed, right? So it's Sol BTC versus ETH BTC, and we all know what happened to ETH BTC. This pattern turned into distribution. This flat base top turned into distribution and crashed. Sol was forming the same pattern here that could potentially crash to the downside. Now we posted this back in February, the 3rd of February, but it's the unlocks that we wanted to talk about. So well, anyway, I think all this is about the Sol unlocks we posted here. Pantera Capital and all of the stuff was going to get unlocked in March. Obviously the market started to drop before March in anticipation of that unlock. But you're asking about the relationship between the three of these coins. Well, we do have to compare Sol to Ethereum in a way, because it was the golden child of each bull run in a way. But the dominance charts here also have a very important relationship to be focusing on. And I don't know when we shared that back, whenever that was. That's back at the start of March. But the huge unlocks obviously dropped. Now a lot of those unlocks, I don't know if they're already sold or not. Nobody will know. Maybe somebody could trace back where Pantera got their coins to. Have they moved yet? Not just Pantera, but all those institutions that bought up the cheap Sol in the FTX bankruptcy, and that huge volume there bottomed the market, of course, as well. In that, the relationship this time, I mean, the DEX market, Binance and centralized exchanges got the raw end of the deal. Binance and Coinbase and all were getting sued, so it pushed people away from using centralized exchanges because they got banned in all the countries. Everybody got pushed into using DEXs, which were a lot of meme coins. This fueled Sol, fueled the meme coin bubble, and took money and took liquidity away from Ethereum. Well, here in this run-up. So obviously Ethereum was already a large market cap, but when you take away the liquidity, or take away a main stream of liquidity from one of the main assets, it becomes a bit of a problem. Now, as far as I'm aware, BSC, Binance, are now creating their own structure to allow for meme coins and all that sort of stuff. So it's going to put further pressure on Sol, and I think that pump fund and all that sort of stuff. So Sol is not the sole beneficiary or whatever anymore. There is competition coming into the market that's going to dilute the market even further. More market saturation in the meme coin market. I mean, less revenue, less fees, all of that sort of stuff for Sol. So obviously it was, obviously in hindsight it's even easier to predict that Sol was going to crash or Sol was going to fall. That with the liquidity issues, with the pet rock analogy I made, meme coins were extremely hot, with all the Sol getting unlocked and all that sort of stuff. I mean, in hindsight now, you look back and it's like, oh yeah, of course that should have been an easy call, but in the moment it was a difficult call to make. People were giving me a lot of pushback in the group, telling me how good Sol was and this and that and everything. None of that matters. The charts and liquidity matter. News doesn't matter. News, it's the market's reaction to news is important, not the news itself. So not only did BTC have this this bearish stop hunt. But if we move to the 6-month chart, well, you can see what this done. This was a monstrous move higher. So for me, it was already a monstrous move higher in 5, 1, 2, 3, 4. Well, it was 5 at one point. Green 6-month candles to the upside. That's cause for concern alone. So that was another factor. And then you get a bearish stop hunt after this huge move. Well, I mean, it's just saying, well, we need to sit in our hands here. We need to, patience is one of the hardest things to have in the market. And actually, I posted something the other day about it in here in the education study section. But the best investors in the world are really good at doing nothing for long periods of time. And it's such an important thing sometimes because, when you see this, you want to have the patience. You want to see where it's playing out. If you're going to trade, okay, trade the smaller time frames, but be very cautious, of course, because a bearish 6-month or bearish yearly dip can create even a small 20% pullback that can really tip the market on its head. I can't trade the market for people. I can only give my opinion on it, and people need to manage their own accounts and expectations and their own risk management or whatever. But it's frustrating. Like I get frustrated in this, even though I was kind of expecting this, or at least I was expecting this on Ethereum. I didn't think it was going to drop like this. I actually thought there was going to be a buy coming in here somewhere to then bounce back up. But obviously this is frustrating, for me personally, because it takes the sting out of the market. The last X amount of years when Bitcoin had big moves up, the money would come out of Bitcoin and move into the altcoin market. This time the money did not move out of the... Did I say that correctly? It did not move out of Bitcoin and into the altcoin market. This time the money just came out of everything and everything crashed. So that's a little bit frustrating after waiting patiently for a period of time for the altcoins to try and get that move higher and try and get some sort of alt season. So for me, it's a little bit frustrating that the liquidity was so low in the market that money didn't come out of Bitcoin and move into the altcoins. The truth is, it might have done that a little bit before Christmas. Bitcoin was very extended. Money probably did come out of Bitcoin a little bit, but it was less noticeable than usual. We had a bit of a mini bull run in November or December or whatever that period was that things were pretty hot. I mean, looking here, October to December. So as it was coming in here, October to December, that move was pretty strong for the altcoin market, but obviously then it rolled over. That would have been a little bit of money coming out of Bitcoin because Bitcoin had done and moved through 100k level. So of course the relationship is, there is still some correlation and some relationship there between Bitcoin and between the altcoins. Money would have come out of Bitcoin when it crossed the 100k level or up close to 100k level. People have pulled that out. The altcoins are hot, would have rotated into the altcoins, but that just didn't drive the altcoins enough. So all the relationships are still there, maybe not as prominent. I still think, trade the charts. If we focus on the charts, things can still be okay. You can still make a lot of money. Very simply put, I always say, do not be longing in a red quarter, for example. There's no need to be longing in a red quarter, and if you are, have very tight stops. Your money, if you're a long trader, your money is made in green candles, green environments. Now, this is a tool we've created very recently to show people when they want to be hot, on the long side, when they want to be putting in more exposure. When you start getting most of these, you can see here the 3-day is just trying to flip right there live. When these are all red or mostly red, and the larger time frames are red, that is a sign that is bearish, and you do not want to be, you don't want to be having too much exposure in the market. When these all start flipping green again, well, that'll be a sign that the market is hot, and that's when you want to be putting on more money for a long exposure. So this tool can give a very quick visual of, what are we doing in the market? People that have day jobs and all the rest, they can just flick on have one look at their phone or their laptop, this can tell them, well, yeah, I don't really need to be trading today. Everything is bearish and red. But on days that everything is green, for example, they'd be like, well, okay, I'm going to take a trade today. I'm going to have more exposure on the market. It's not an exact science, but it's, all of this stuff here would have happened when these were all green, for example. And that just shows you, the power of, understanding the time frames in the market. Obviously when they're all red, the market is dropping hard like this. When they're all green, the market is in a bullish move higher. Now, behind the scenes, we have been working on a lot of things to try and really improve things for people, to make better tools, for people to make better informed decisions, so people understand what's going on in the market. We have improvements coming for the golden trend. We have new stop hunts, improved working stop hunts, and quite a few other important things that we're working on to really try and help people do better in the market, I suppose. To make it easier for people to understand what to do in the market, potentially, maybe, I'm not saying not to rely on me or whatever, but to be able to build a system for themselves so they understand the system that they can actively use or trade to be more knowledgeable and better and efficient in the market. Truth is, we've been searching for kind of the holy grail. It's not easy, of course. There is no holy grail in the market because the market is complete random and the market is different throughout periods. But if we can nail down very important periods in the market, then the idea is you want to maximize those. When they are there, then you want to up your risk. Most professional traders, they might take 100 trades, okay, but 90 of these trades, we'll say 80 of these trades are actually all break even. They're all scratch trades, but it's the 20% of trades, or whatever it is, 10 or 20% of trades that they take where they make all their money. And that is because they have outlined a hot period in the market, and then they have allocated extra capital to it because they are more confident in the market in that period of time. But the other 80 trades that they take, they've made no money whatsoever. But it's all about managing the risk in this bad period here, and then maximizing the advantages when you get to these parts of the market. When the market is hot, for example, you make your money there. Or if you're a short trader, of course you love this and you make your money there. Everybody needs to figure out what they want to be. Do they want to be both? But understanding when the gains should be made and understanding when to take risk off in the markets is an extremely important thing. This little tool here is only one little tiny aspect of what we want to kind of provide for members. But understanding when to put risk on and understanding when to take risk off obviously is extremely important. Part of the truth is that knowledge of time in the market, these are just time frames, but knowledge of time in the market can be a game changer in keeping people safe. Obviously, to a certain degree, there's always risk in the markets, but then when to be more bullish in the markets and when to try and make that money. Anyway, speaking of time, about where to buy Bitcoin, where to buy Ethereum, where to buy Sol. I think time is going to play a key factor in this, and you can see right here that the 3 month is red. We are on a 3 month time frame here, and you can see that it is red, red, and red. I think, again, if we take time into consideration, we need to see in how many days? It's not telling me how many days. 18 days there. Sorry, yeah. I had to change Bitcoin here to a 3 month. So the thing is, we are red on these time frames. The safe buy for Bitcoin is to trade a new quarter, right? And see if we can get green candles. Now, ideally, we could get some sort of bullish stop hunt on this to build out this range, and then obviously then we would break to the upside. Now, there's obviously always the possibility that Bitcoin does something like this and doesn't take out the lows again. The low is already in. The low could already be in here, and then price could start moving to the upside. But you can see here there was a dip down close to the lows that took liquidity into the wick. Okay, the fact of the matter is we probably will get something like that on a new quarter. So if you missed the wick, there's probably going to be some sort of wick fill to try and get on board. Now, the truth being told, the market looks pretty weak. Now, we don't know how it's going to close, but if you look at all these candles right now, they are pretty weak. Now, if you look back here, you can see that the market pulled back, but on a new quarter, there was more downside that bottomed out the market. The truth is, because we are so weak so far, there is a possibility that Bitcoin comes down here below here to actually bottom out the market, right, and do something like that. That is kind of my preferred scenario, I think. Of course, it would mean my holdings would go down a bit more, but that would mean then that there would be bullish stop hunts in place to run this back. We would have bullish stop hunts here to run this back. That is probably my preferred scenario at this point in time, that we would stop hunt the lows of here, and that's where your buys are at. Now, I'm going to talk about the caveat to that, because recently in the market for periods coming into the end of months and the end of quarters, there has been huge bounces. Okay, now we look at Ethereum here. Remember here when this was right down here in the lows at the very end of the quarter? Towards the end of the quarter, we bounced hard and fast into the end of the quarter, and then the next month there was a small dip, and we went higher again. So if you didn't FOMO buy at the bottom here, you I didn't say struggling, because there was still a possibility to get in on a dip. You know, you could have got in on a dip here on the wick fill, right? There's still safe entry points on the new quarter, but what I'm saying is there's a possibility we start to create large wicks here now over the next 18 days, and the market continues to bounce. The buy might be right now today, because the market has been doing that recently. Like, I used to always wait until a new quarter. That was just the way the market would operate mostly. Back here, for example, back here 2017, 2018, it was usually okay to wait until a new quarter to get on board. Not always, of course, but the market seems to have changed a bit. Like, you can see that all the way through here, there's not many wicks on the downside here. But if we start looking here more recently, well, bit of a wick, bit of a wick, bit of a wick, 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 and here we are today. There has been more buying pressure into the end of the quarter than there has been previously, than I used to be used to, but I've noticed that change. It's not really prominent here on Ethereum. It's a bad example, but it's a small example of what it is, and the altcoins are probably a better example. So what I'm saying is the buy could be right now for some sort of alleviation, some sort of bounce into the end of the quarter. Now, I haven't mentioned the stock market yet. The stock market's going to play a key role in all of this, of course. There's a bearish yearly stop hunt on the stock market. That doesn't usually change until a new quarter. So we need to see if the stock market can have any strength going into a new quarter. Okay, so the stock market is right here on the left-hand side. I actually just put it on there. You can see that all of these, when they were red on the quarter, red on the quarter, red on the quarter, don't get me wrong, there's been periods with wicks, but when you're deep red on the quarter, they usually stay red. I don't expect anything like this, where we recover. It's only 18 days left, and not all of those are trading days. So I'm not expecting this to flip green, but what I'm saying is we need something like this on a new quarter, or something like this. Obviously, if we get something like this, there's more downward pressure on crypto as well. We need some sort of recovery. If we can get a bullish quarterly stop hunt on the stock market, well, that means it's probably load the boat time in crypto. Just get in there, load the boat with fairly tight stops, because Ethereum and Sol and Bitcoin and all, they're probably going to create bullish quarterly stop hunts as well. And we know the part. Look at this quarterly bullish stop hunt right here. If they hold, look at this one right here as well. If they hold, they can be extremely powerful, and we can then see huge moves in the market. It's likely going to follow through into crypto. For now, Bitcoin is red on the week, and it is still bullish as long as we stay above the weekly open or so, around there. You could even use the 3-day open, as long as it's above the 3-day open or the weekly open. there's a bullishness to the market, and the altcoins could start to recover. Some of them haven't really recovered yet, but I do suspect some upside in the altcoin market because, and I posted this in the group, we do have these red 2-week candles to the downside. I think on a new 2-week there can be some sort of recovery on many of these because it's moving into the end of the quarter. So what I'm expecting is some sort of small dip down on a new 2-week. That's in 3 days time. Some small dip down into the wick, and then we can get some recovery. Now, my hope is that it doesn't happen before that. If we can get this sort of scenario, there's a decent chance, we could make very good gains off that, because it could present a low risk reward entry point that we can then be, loading up. I'll use that term, loading up, likely. But the fact of the matter is, it might be a decent opportunity to actually try and get on board for some gains in the market on the long side. The hope is, in the meantime, that it does not do something like this, these big wicks. That would be very frustrating to not give us that perfect opportunity. So the thing is, if you don't want to miss it and you want to take a risk on it, obviously it's probably in the buy point right now with fairly tight stops. That is more risky, but the problem is the market doesn't always give us exactly what we want. If we look at the 3-day time frame here, if we look at the doji candles that are forming, there's a real possibility that on a new 3-day, it might not wait for a new 2-week candle. So tomorrow is a new 3-day candle, and there might be green candles up tomorrow that actually take away that opportunity on a new 2-week and bounce this market now before a new 2-week. So that is the concern with the 2-week theory. Here's some 3-day dojis here that cause more upside. 3-day dojis here created more upside. A red doji here that created more upside. So there's these doji candles forming here that we need to be on alert that they could start to push the market higher from today and tomorrow. Now, the safe way to do that maybe is to trade a new 3-day candle, a small dip down and a flip green on a new 3-day as a buy to try and push this market higher. 27 minutes on this video. I knew it was not going to be an easy one or a quick one. Truth is, I'm not even sure if anybody's going to watch it if they see the 28 minutes on it. But then maybe they can flick through it and have a look, and maybe we need to get some sort of AI thing to do a summary of the video or something. It's not easy when you start going in depth into some of these things to try and portray what the market is doing. But I will post the short answer, and the short answer is, if you're looking for the buy points, we need to be watching tomorrow. But if it's not tomorrow, it's a new 2-week candle. Possibly today as well on some coins, but into a new 3-day candle as well. Anyway, mate, thanks for the question. Very good question. And I hope you're well.